Hello, good evening, everyone. Welcome to all of you for today's session. Students, just let me know whether you can hear me well. Can you hear me well? All right, so we were doing the last question of December 2022 exam in the last class. So we will wind up that question and we will proceed. Yes, Marlowe's company. We were doing this question. Yeah. So, and we have done first part, that comment on the evaluate the matters to be considered and explain the audit evidence and the audit evidence you expect to find. Yes. So this is the point. Now, so students, second part, inventory. We have done the part of the leases, the inventory one. So that has to be completed. Right. So Marlowe's has recently negotiated arrangements with a new supplier, including in the contract is a clause which allow the supplier to require return of the products anytime. Right. Marlowe's company can also return the products within a set period of time if they remain unsold. Inventory purchase, yeah, within a set period of time if they remain unsold. Okay. Now, inventory purchase from the new supplier is with a value of 8.1 million is included in the closing inventory. The amount is recognized at cost which is lower than the NRV of the, yes. Now, students, the point is how to deal with it. I told you in the last class, first of all, we have to discuss the materiality of the matter. First of all, we have to discuss the materiality of the matter. Yes. And let us start discussing it. So Marlowe's company, the matter is of inventory. Inventory and matters to be considered. Matters to be considered. Yes. So first of all, we will be writing here. Just a minute, please. Yes. Now, the inventory purchased from new supplier. Now, if we remember, there is the materiality level is 1.1 million. Yes, is higher than purchase from supplier and present in stock at year end is higher than the overall materiality level set for audit. So it is material, is higher than. Now, students, here the accounting treatment is a different. Now, which accounting standard basically deals with it? Students, as per IFRS 15, as per IFRS 15, inventory a sale should be recognized when control, when performance obligation is satisfied and control of goods is transferred. Right? This is what IFRS 15 says. Now, but here, in this case, Marlouse has right to return the inventory purchased from supplier. They have right to, yeah, supplier. Now, the point is, Marlouse has the right to return the inventory purchased from supplier. Which is unsold. Unsold. Which is unsold. And it means the inventory is held on consignment arrangement by the Marlouse company. Held on a consignment arrangement. The inventory held with it is property of supplier unless it is sold to the customer of the Marlouse and title is transferred. Title is transferred. From the supplier to the customer of Marlouse. Yes. Or Marlouse can recognize inventory as purchased where it has no right to return the inventory to the supplier. then it can organize. That is mean that is cancelled. Now, how many marks it bears? Let me check. 7 marks. So 3.5 marks we have to write. So 1, 2. Yeah. So here, inventory held at 8.1 million at year end in financial statements of Marlowe's is the inventory of the supplier, and 8.1 million paid to supplier should be recorded as right to refund as a receivable. Now, students, and the company has incorrectly recorded it as its own inventory. Hence, so its inventory is overstated and receivables are understated. Simple as that. Now, what is the evidence? You see here, materiality, what IFRS is saying, and applying to scenario, the biggest part, the most important. Now, students, what is the evidence which should be present in the audit file? Students, they say new contract, new negotiations. So, what is the evidence? Copy of contract with new supplier reviewed to confirm the sale or return arrangement. Yes. And any conditions attached. The first one. First of all, auditor will do that. Yeah, they say it is 8.1 million. $1 million, they say that. So 8.1 million, yes. The point is, copy of inventory record reviewed to confirm the inventory value at year end, unsold inventory value which was purchased from new supplier. Yes. The next point is students, yeah, extracts of bank statement showing the refunded amount from supplier for return of inventory by Marlu's company. Yes. If it was returned, yes. Now, discussion notes with management. Discussion notes with management about incorrect treatment of inventory and a request made to correct it that in accounting record. Now, students, how I decided that I need to write 4 evidences? How I decided that? There were 7 marks. So 3.5. 2 requirements. So we did that. Okay, the next requirement is evaluate the implications for the audit report of Marlu's company, assuming that inventory matter has been satisfactorily resolved, but no further adjustment and disclosures are made to financial statements with respect to new property lease. Okay, new property lease. No adjustment was made. Inventory is resolved. Right. So it was done in the last class. What was the issue over there? Yeah, depreciation was not charged. 4.1 million. They have not corrected it. Inventory matter has been resolved, but regarding new property lease, they have not done. So students, how to discuss it? B part. Students, now the matter is that is 4.1 million. So management has not recorded a depreciation of 4.1 million in relation to new property lease. please. Hence, financial statements are misstated. And profits are overstated by 4.1 million. And it is a material misstatement. Misstatement in financial statements. It is a material misstatement. And it is a single misstatement So it is considered as material but not pervasive. But not pervasive. So if management, so auditor should give qualified opinion due to material misstatement in financial statements. Opinion paragraph of the audit report will be headed as qualified opinion, and followed by basis for qualified opinion. Paragraph explaining the reason for qualified opinion and explain the reason and explaining its impact on financial statements. Now, students, listen. This line, this one, if you write, 1 mark is for it. 1 mark only for this. That basis of qualified opinion paragraph will be there. And we will explain the reason for qualified and explaining its impact. Impact of misstatement on financial statements. Yes. So it is complete. So the heading will be impact on audit report. It is a 4 marks. Done. So the next question is, that is, so Marlus is done. So I'll not be moving to the other assignment question today. Other questions I'll be doing. So the question is Encore company. The next question is Encore company. We will be doing that. June 2023. Here it is. Students, please open everyone this question. So this is, you are a man, it is 1st July. You are a manager in the audit department of Garrick and Company, a firm of chartered certified accountants. You are assigned to the audit of Encore company has a following year ending 30th September and is a new audit client of your firm. It is a new audit client of your firm. Right. Next. So, Encore company designs and builds boats which are used in the fishing industry. Each boat is specific to the order. Right. So, partners email. So, to from, I have provided with some information which you should use to help with planning the audit of Encore company, our new audit client. For the financial year ending, yes, 30th September 2025. When determining materiality, please use revenue as your basis. I have concluded that revenue is an appropriate basis for materiality. As the revenue has been stable now, using exhibit 123, evaluate the significant risk of material misstatement to be considered in the planning the audit. In planning the audit, evaluate and prioritize. You are not required to consider risk of material inventory at this point. It will be dealt later, separate. B part. Justify why inventory has been identified as something new. Why? Design audit procedures for to address those risks. A very different type of question it is. Now, evaluate any ethical and professional issues raised and recommend any action to be taken by Garrick and Company. The students come here. So the Word document, I'll be opening a new. Yes, it is. Yes. So starting with it, to, from, subject, date, introduction paragraph, and the first one is evaluation of risk of material misstatements. Yes. Now, A part. Yes. So now, what is the first thing to be done? The first thing to be done is materiality. We know that. Materiality. Yes. So materiality, which has to be calculated based on revenues. Based on revenues. Now, so where are the revenues? Just a minute. Here is the information given. Okay. So first of all, materiality. Yeah. For the sake of audit at planning stage, materiality will be based on revenue of the company. Revenue of the company. What is the benchmark? Yes. Benchmark is 0.5% to 1% of revenue. 0.5%. 0.5% of revenue is how much? 4.9 million. $24,500. Yes. To 49,000. Yes. And 1% of revenue is 49,000. Now, we have not studied the scenario yet. Ideally, we should not justify right now that what should be the ideally. But I have one point with me right now to justify materiality. What is that point? That point is new audit client. It is a new audit client, right? So, an core company is new audit client of our company. New audit client. And in order to perform detailed audit work on this client, initially, materiality is set at lower threshold of 24,500. Yeah, initially, this is materiality level defined on in base at planning stage. And as the audit progresses, this level can be reviewed and revised based on additional information obtained. Students, this is what I'm saying. You get 3 marks immediately if you do this properly. Yes. Now, so now we have to assess the first requirement is which is related to the significant risk of material misstatement. Yes, we will be doing that. The one identified is new audit client. New audit client is an, yes, it can be risk of material misstatement. How? I will explain. You might be thinking, Mr. Hamzah, this is a detection risk. You might be thinking this is detection risk. Yes, it is as well. It all depends about your explanation. Students, let us start reading the scenario. Encore was established 10 years ago by 3 engineers and has become a well-respected company in the design and manufacture of large boats used in commercial fishing industry. Now, the company is relatively small with only two people working in Puneet, you have done many effort. You know, you can write for other as well. I just wrote it here. This sentence can be written for every client. I didn't write it yesterday because I had other matter over there to write about. Okay. Yeah, it can be written over there. Yesterday, I told at the start of question, I have not gone through the question yet. Okay. Yeah. So it can be written anywhere. But there, yesterday we had more, we have gone through the question and more logics to justify the materiality. Okay. Now, so it's better to go through the scenario first. identified to all analysis. Now, ENCORE was established 10 years ago. Yeah, by 3 engineers and has become a well-respected. Okay, right. The company is relatively small, but only 2 people working with 2 people working in the finance department. For the last 6 years that I engaged with another firm, Coach and Company believe that external audit provide credibility to the financial statement, which has helped the company secure finance. The audit opinion issued by the coach has been modified and modified each year. The audit firm resigned due to conflict of interest with another client. Encore owns 2 large premises in 2 towns called Seaville, where the boats were built. It owns a dockyard, an area used for anchoring, repairing, and maintaining ships, where customers can rent a space to store their boats when they are not in use. The company's head office is also located at the dockyard, both of which are capitalized and depreciated in accordance to their useful lives. Okay. Encore typically works on 20 customer contracts at one time. Boards are normally delivered to customer as soon as they are complete and have undergone the necessary external safety inspection to receive a license to sell, which is when the company has completed its obligation under the contract with customer. Yes. Now, so student, this is the background information which helps us to understand the upcoming points and maybe link to that as well to some extent. Now, here we are. So payroll, outsourcing and control lab. In November 2024, the company employed a new finance director, Gavin B. When reviewing the company's control over payroll, Gavin noticed several significant deficiencies, which meant that overtime payment was not always authorized and time were missing. Concerned about this, Gavin convinced the other director that Encore company should engage a service organization to deal with the company's payroll. From 1st June, Beer Payroll Services has provided an outsourced payroll service to the company. Now, this is one audit risk. Yes, risk of material misstatement. Yes, not audit risk here. So we will be talking about it. Now, this is issue. Yeah. So students, yeah, we have copied this data from here. Next point, joint arrangement. In May 20x5, Encore entered into joint arrangement with Elm Associate, a company which designed luxury boats. The objective of arrangement is the development of a new range of boats to be marketed to providers in the leisure industry. Encore company has not contributed any cash to the joint arrangement, but has provided two of its senior board designers to work on the project for several days. Gavin intend to recognize $75,000 intangible asset on the basis part of amount represent on the time two engineers spent on the project by the year end. The 75,000 also include an element of intellectual property. The company is investing into a project. So this is another accounting issue. So yes, here we are. Yes, joint arrangement. The next is historic boat. One of the company's shareholder gifted an historic board to the company. The company needs to develop an accounting policy in respect of the board. As there is no specific area dealing with type of asset, Gavin Bay has valued boat at 50,000 and has recognized boat within property plant equipment and included the 50,000 income within the operating profit. Good job. The boat will be displayed outside the company head office. It does not meet the definition of property plant equipment, I think. Yes. Let's see. So historic boat is the next point. Yes. Next, dockyard damage. On 1st July 20x5, a severe storm caused damage to the company's dockyard. Yes. Property with a carrying amount of 108 and two boats which were being stored in the rented spaces at the dockyard by customers were severely damaged. But damage has not yet been quantified. Given belief that company's insurance will cover. Now this is a point. Students, loss impairment, two accounting standards applied. It is impairment of asset as well as IS 37, contingent assets. Now, yes. So the next is here. So the next is company's projected revenue for the year is this. Now this is analytical review. Operating profit include this. Company's total assets are here. So I can copy it from here for my ease. I will be utilizing it, analytical review. Just a minute, please. Now, students, we have gone through the 3 exhibits. They told us you have to go through 3 exhibits only. Here. 18 marks. Now, 18 marks means 3 marks materiality deducted. 15 marks. We have to discuss 5 accounting issues. How many accounting issues? 5 accounting issues. 3 marks each. Ideally. Yes. So now I'll be back to this here. 1 issue, joint arrangement 2nd, storyboard 3rd. Okay, this intangible assets, joint arrangement, just a minute, please. Joint arrangement should go with it. Yes. Now, yes, 6, deferred income. 7th is here, analytical review. So in exam, you will write only limited points. I'm telling you. So what I'll be doing, we have to just arrange it. So new order, yeah, no, new order client is also a point. New audit client is also a point. Yes. Payroll service is also a point. Students, The point is how to discuss this new audit client as risk of material misstatement. So, what is the name of auditor? Garrick, I think. Yes, Garrick and Company. So, Garrick and Company is going to audit an core company for the first time. For the first time. Yes. And previous year audit was done by another auditor. Another auditor. So, opening balances of this year are closing balances brought down from last year. And they may be misstated due to incorrect accounting policies adopted by the Encore company. Yes. Last year. Yeah. Financial statements. Yeah. 1 point. Maybe misstated. And this risk is increased due to weak internal controls. Now you see here, weak internal controls in the payroll. As identified by a new finance director. Increased. Hence, risk is high that opening balances may be misstated. Opening balances may be misstated. Yes. Student, you see here, I have not discussed that there is any sort of detection risk. If we discuss that, it will be a blunder. I'm telling you. Writing this thing that there may be a risk of, there may be detection risk. If you do that, in this case, because we have not to identify audit risk, not to explain audit risk. Yes. I hope it is clear. Now, let us proceed further. Next points. So the next point is payroll. Yes, this point. Yes. In November 2024, the company employed a new finance director, Gavin B. When reviewing the company's control over payroll, Gavin noticed significant deficiencies. Overtime payments were not authorized. Now, the point is authorized and timesheets often went missing. Missing timesheets, lack of authorization. What does it mean? Record may be understated, wrong overtime may be claimed. So in November 2024, they did new finance director. And yes, it means in the whole previous year, almost it was being done. So it has basically two aspects. It has basically two aspects. The company's payroll. The company's payroll department had significant control deficiencies. Now, it is not an accounting issue, but it is affecting finance statements. Yeah. And payroll is significant for the company and a material amount to its financial statements and is normally a material amount to its financial statements. Now, significant as per finance director, significant deficiencies yeah overtime payments were not always authorized. Yes, not authorized, which means there might be errors and frauds in the overtime payments claimed by employees and paid by the company. Yes, significant error and frauds. Their possibility is there. And employees may not have worked overtime while they might be claiming the payments. They might be claiming the payments. The payments. Yes. Now, and timesheets. Moreover, so overtime costs in payroll may be overstated, right? Moreover, several timesheets went missing. Several timesheets went missing. Now, what does it mean? Which means some costs related to payroll may not be recorded, and payroll costs may be understated. Yes. So we have explained it. The first aspect, controlled efficiencies, we have explained. Now, the next aspect is, which is related to outsourcing. Which is related to outsourcing. That they have outsourced it to a service organization. And we have done one part in the last class, impact on audit planning. Right? Now, we will talk about it. We will talk about it. Now, students, the company, which date? They from 1st June. Has provided, yes, to the company. So it is possible that due to a specialized service provider having good controls, the risk of material misstatement after 1st June in payroll may have decreased. May have decreased, but it should be decided after evaluating controls and competencies of BPS, Beer Payroll Services. Yes. Now, possibility is there. So enough. It is enough for 3 marks. Remember, if they have asked us to explain audit risk, then we can comment more on this outsourcing, the fact that may not record, may not be available, outer may not have access to the outsourced organization, BPS. So detection risk may be there. But right now we cannot mention that. Remember this difference between the both. Now, joint arrangement. Yes. So joint arrangement. So they say they are actually designing something, developing something. So what is the first thing to be done? Materiality. 75,000. 75,000. Yeah. So students, the amount of 75,000 which an core company intends to recognize as intangible asset is material to financial statements of the company, as it is higher than materiality threshold. What is that? Now, student, listen. This a company wants to recognize as intangible asset, 75,000. So, a bit tricky it is. As per IAS 38, intangible, an expenditure can be recognized as intangible asset when 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 it is a separately identifiable asset. It will bring economic benefits to the company. Yes. So when it is identifiable asset and economic benefits are probable to inflow from it. And it is controlled by the company. Yes, company as well. It's controlled by the company. Now, students, here, jointly development of boards and two engineers being part of company working on the project jointly development of the boards with Allen Associates means that company that and core does not control the asset itself, and yet no economic benefits, they're working there only, are yet clear to be obtained. So it should not be recognized as intangible asset. Yes, it should not be. One more thing, asset, when it is identifiable asset, the economic probable, technical feasible, technical feasible. Yes, yes. No economic value directly to be obtained, no technical feasibility of boards has established yet. Yes. Now it's good now. Now, students, this is enough if you discuss it, joint arrangement for 3 marks. By wrapping it up, hence, if there is risk that if they record it as intellectual property, if they record part of it, because they part of it as intellectual property, yeah, what will happen? What will happen? So intangible assets will be overstated and payroll costs understated. Students, this point can be discussed from the point of view IFRS 11 joint arrangements. Okay, so but choice is yours. I have discussed from the perspective of intangible assets. Simple is that. Both are correct. If you discuss from that point of view, because I am assuming 3 marks for it. For 3 marks, it is enough. It is enough. Next. Historic board. This is historic board. Students, they have recorded is at property, plant, and equipment. What is property, plant, and equipment, by the way? Which is held for use in production or supply of goods for administrative purposes. For that, it is just being displayed. It is not being used in the production anywhere. So it should be recorded better at its fair value as an asset. So it is a gift. So student, it should be increased in the now. So I will be discussing it. So first of all, materiality. The value assigned to the boat received as gift is higher than materiality level. So it is material to financial statements. As per IAS 16, property, plant, and equipment, an asset can be classified as property, plant, and equipment if they are held for use in production, supply of services, or administrative use. Yes. So what IFRS says? If they're used for that, for more than 1 year, yes, then non-current asset. 1 year. This boat, the boat received as gift, will not be used for any of these purposes. Rather, it is just displayed at outside company head office. Head office. Students, so it should not be recognized in property, plant, and equipment. It should not be recognized in the property, plant, equipment. Rather, it can be recognized in other assets of company. At fair value, which can be received if it is sold. If it is sold, while a credit entry to this effect should be recognized in equity. In equity, as it is related to shareholders now. They have right on it as a gift. Yeah. Students, now the point is, if the company does not, if the finance director does not correct the accounting treatment of the boat, so property, plant, and equipment, and operating profit, because they have recorded operating profit, are overstated, and equity is understated. Understated. Simple as that. If there is any confusion, you can ask. If there is any confusion, you can ask. Now, let us proceed further. Dockyard and damage. Very easy. This is basically impairment. Basically impairment case. Damage and impairment. There are two issues in it. One is impairment, the other is claim. A severe storm caused damage to the company's dockyard property. Yes. An carrying amount of 108,000 were stored in the rented space by the customer but the damage has not yet been quantified. Now, the company's insurance will cover this cost. So carrying amount is first of all, materiality. So this damage is an indicator of impairment. That should be, so impairment review should be considered, right? Now, that should be recorded. And now, so let us proceed and talk about it. The carrying amount of the property damaged, property and boats damaged due to storm are much higher than materiality threshold. So they are material to financial statements of company. They are material to financial statements of company. Now, next point. As per IAS 36, as per IAS 36, an impairment review should be conducted when any indicators of impairment are there. Storm damage to property is a clear indication of impairment of dockyard, yeah, and two boats. So the company should have conducted an impairment review of the same. Yes. And if, now applying standard, if recoverable amount of the property is less than its carrying value, an impairment loss should have been recorded. An impairment loss should have been recorded. Yeah. As the company has not charged any impairment loss, the risk is that assets are overstated, assets and profits are overstated. Now, moreover, the next is, which is related to, yes, the next is related to insurance. So insurance claim. Gavin believes, the finance director, recognized a receivable and deferred income relating to insurance claim for storm damage, a material amount to financial statement as it is above materiality threshold as per IAS 37. A contingent, asset as per IAS 37. Yeah. And an asset related to such claim can be only recognized if it is virtually certain to be received. If it is virtually certain to be received. Here, company has claimed the amount, but insurance company has not confirmed that claim will be received by the claim amount by the company. So it is not virtually certain to be received. Yes, they have not confirmed. It is not virtually certain to be received and cannot be recorded as asset as recorded by company in receivables and deferred income. Deferred income. Now, hence, assets, receivables, and income or profit and receivables and deferred income are overstated in financial statements. Simple as that. Done. They are overstated in the financial statements. Yes. So students, now analytical review. Let us talk about it. Analytical review. The company projected sales, so we have to calculate and discuss that. Revenues are increasing. Yeah. And profits. We need to students, the point is, how much is increase? Revenue. The company's revenue are projected to increase by how much percentage? 4.9 over 4.65. 5.3%. 3%. And operating profit by 0.588 divided by 0.48. 22.5%, while now, so operating profit margin has margin now 0.48 divided by 4.65, 10.3% to 12%, is to increase from 10.3% to 12%. Yeah. Now, how to discuss the risk? Which means that operating costs have been decreased from last year. It may be because of some valid reason, but there it is also, there is also risk that some operating expenses are missing this year or understated. Like payroll cost may be understated due to some missing payroll sheets. Yes. Students, like that. So it is done, analytical review. Only there was 2 points only, so 2 marks it is. now. So it is, yes. Now, students, we have to arrange it. Now, you see here, we have significant risk. Yes, significant risks we have to talk about. Payroll is huge amount. We have seen that. Payroll is huge amount. 2 million amount, right? This year. And this is the biggest amount yet. 75,000, 50,000. Impairment is also, this is also small amount. Dockyard, claim, yes. So payroll should be at first. Is yes. So payroll should come first. New audit client cannot be first here. Why? The reason. The reason is quite clear. It could have been significant risk. They say that it is a new audit client. Previous auditor resigned. I said here because there was a conflict of interest only. Yes, this one. And the report was unmodified. So that's why it is not a significant risk. That's significant. So payroll comes first because it involves the highest amount. Okay. Then comes second amount is 75,000 historical load. It is 108 impairment. Yeah. Boards 108,000. Do mention the amounts. It will help you to arranging. It takes only, I think, 1 minute to do so. I am explaining it. That's why it is taking more time. Dockyard. Third number is that of 75,000. Yes. 75,000 is the third number. Joint arrangement. Next. The next is historic vote. No, insurance claim. Yes, comes. Insurance claims. It goes with the impairment. Yes, here. Now, next comes historic boat, 50,000. Yes. Students, analytical procedures are of high risk, but not now, because only one expense is there. One issue is there. Sometimes there are so many issues in it. Right. So, student, it is almost done. So new audit client should be at the end. Yes, like this. So conclusion, we have to write conclusion. So students, the first point is the several risk of material misstatements have been discussed in the order of their significance with regard to amount exposed to the risk of misstatement. And probability involved. And relevant probability of the same. Payroll having highest amount involved of 2 million due to weak controls is having highest risk of material misstatement. Misstatement. Followed by, what is that afterwards? Yes, insurance claim. Followed by insurance claim of 110,000 recorded as 110,000. Receivable and impairment loss and then dockyard and boats having value of 10800 exposed to misstatement of impairment loss and remaining risks are followed. Yes. Yes. Done. Remaining risks are followed. So we have to discuss 2 to 3. Enough. We explained why we have prioritized. Now, so it is done. So students, now it is time for a short break of 10 minutes. 10 minutes break, I'll be back, and then we will be, of course, it is for the same purpose. You know, I told yesterday that when I'm writing the answer, I'm writing all the aspects in mind. Professional marks are not something only for one format. I told you 5 to 7 marks maximum for some additional things are there, right? Giving the headings, appropriate structure. That's it. Majority professional marks are for writing as per scenario, questioning the accounting treatment. Understand? You write that. Writing scenario, utilizing the data from the scenario. So there are professional marks assigned. You've got to do something extra. Only this structure is there. Yes, I think you were not present at that time. Anyways, so let us take a short break and be back. Please, if it is not clear, you can ask. I can re-explain. Professional marks, if you think it is something extra that we are having dinner, and after that, there will be a sweet dish in the name of professional marks. Please. It is not like that. Majority professional marks are embedded in your write-up. I told yesterday that if you are writing audit procedure as per scenario, you will get marks for procedures, but you get additional marks for analysis and evaluation as well. When you are applying it data properly, okay? Now, so they will be there. I can explain even that to you here. You see here, we questioned here that some of, yeah, we said might be valid reasons. This is commercial acumen of that change. Okay, so why it is different? This 10.3% to 12%, why it is increased? We linked that to payroll cost. It has professional marks. We scaled the risk. Now, so that's the end of this question. We have to write audit procedures. The next question is on, oh yeah, inventory. Why inventory is a high risk? Such a wonderful question it is. And then audit procedures on the same, and then ethical issue. So we will be doing this, but after a 10 minutes break. So see you in 10 minutes. Now, students, let us do this question, which is related to justify why inventory has been identified as significant risk of material misstatement. Design audit procedure which should be included in the audit plan to address those risks. Now, 14 marks. Here we are. So Isabella Phoenix, the engagement partner, thinks that based on our initial review, inventory gives rise to a significant risk of material misstatement. She would like you to justify this. Why it is logics. Because the briefing note will be used to explain the audit approach to the audit team and to recommend audit procedure response to specific risk. Now, this is something new. It has been tested for the first time in AAA. It was not tested before. Never. That they ask such questions. So it means if they have asked this question, it can be repeated in the future. That they ask you to justify why it is a high risk. And specific procedure for those risks you are discussing. Yes. So raw material, work in progress, finished goods. So raw material is increasing, work in progress. So we will be calculating what is the percentage increase. Total inventory balance is also increased, which is 637,000, right? Which is highly material. Okay. Yeah. So all they are material. Work in progress is also material. Yes, raw material is just below the below the threshold, 24,500. Now, so next, the company tries to minimize the amount of new raw material store as it promises. Yes. But to take advantage of discount offered on a bulk purchase, a large quantity, yes, it was purchased recently. That's why it is increased. Okay, now, so work in progress. The direct costs relating to each contract are recorded in the job costing system. Job costing systems. Each raw material relevant for each contract are input as they are used. Right? And payroll costs are input manually now, which record the hours spent by each contract. Yes. The direct costs are used as basis for adding production overheads, which are 10% of direct costs, production overheads. Companies finance and estimate the percentage completion. Finance director estimates. He is new. Remember that. He is new. Estimate percentage completion. He is new. Finished goods. Currently, one board which has received its license to sale is being stored at company's premises as customer cannot take delivery until, yes. So this is related to the customer. It should be excluded. A second board is awaiting a safety, having failed first inspection due to safety. Now, how many marks it bears? It bears 14 marks. Sorry. It bears 14 marks, 2 requirements. 7 marks are for this. Why inventory has been identified as significant risk of material misstatement. 7 marks are for it. and 7 marks are for audit procedures. Now, so let us start writing. Now, so it is B part, inventory. So justification of significant risk of material misstatement. Related to inventory. Yes. Okay, done. Now, so student, one by one. So students, overall inventory balance is highly material to financial statements of company, as it is much above the materiality threshold. Yes. Even individually, work in progress and finished goods are material to financial statements. Individually, they are material to financial statements. Now, next. So let us one by one raw material. Raw material have increased by how much percentage we can calculate? Around 50% from last year. Although it is due to a bulk purchase from a supplier in June 20x5. In June 20x5. But still, it need to be verified by audit work. Should it be verified? Yes. Now, the next is work in progress. Just see how easy it is to write about the such items. Work in progress. How much increase? 484 into 533. 10%. Work in progress have increased by 10%. By 10%. This year. work in progress has increased as compared to an increase of overall revenue by 5.3% only. 5.3% only. Yes. So this increase in work in progress is substantial as compared to sales increase. Yeah. The percentage completion of work in progress is estimated by water. Estimated by finance director himself, who has recently joined the company. Recently joined the company. And may not be well versed to apply his judgment to estimate work in progress stage of completion correctly. Yes. Now, so it may be misstated. Maybe. Now, one more thing is the payroll cost. Moreover, payroll cost have been input manually and input manually prepared through manually prepared timesheets and manually puts and manual record has a high risk of error and fraud. And may be manipulated. May be manipulated. Yes. And the next point is that students, overheads. So overheads, the direct cost used as a basis for adding overheads as 10% of direct costs. The basis of adding overheads as a percentage of direct cost may not reflect actual overheads incurred by the company. Yes, may not. Yeah, so work in progress valuation may be incorrect. Now you see here, we have identified these points regarding work in progress. Now the next, finished goods. Currently, one boat which has received license to sail. Now it is related to the, now students, it is linked to the finished goods. So students, for the finished goods, the boat which is stored on the behalf of customer should not be included in the year-end inventory of company. Yes. As it is stored on behalf of customer, as stored because customer cannot take delivery of the boat. Yeah. Boat. It should be de-recognized from year-end inventory of company. Now the next point is valid. And the boat which has not passed the first safety inspection is awaiting a second inspection. If the risk is that it may not be held at lower of cost and NRV as per IAS 2, and costs may need to be incurred on it. to ensure that it passes the inspection for license. Now, so the risk is that its value needs to be written down to lower of its cost and NRV. But the company, we have already said that, but the company may not have done so. Inspection. I remove from here. Now, done so. Yes. And it may be overstated in inventory. Done. You see here how easy it was. There was nothing was difficult here because it was an easy accounting standard tested. But now audit procedures on 3 types of inventory: raw material, now, and the second is work in progress, separate procedures. 7 procedures have to be written. 7 procedures, yes, in total. So, for raw material, for a sample of items included in raw material, verify their costs, the cost from relevant purchase invoice. Purchase invoice says, yes, verify the cost. Second, the bulk purchase account. Review company's correspondence with the supplier who offered the bulk purchase discount to verify the company has purchased the inventory at discount. Yes. Means they are purchased. Verify the purchase of inventory at discount from relevant purchase invoice. Purchase invoice. Goods received note. And physically inspect the inventory at store for existence. Yes, this inventory. So we have written 3 procedures on raw material. So for work in progress. For work in progress. Now, students, I would suggest to you, write 3 procedures for on these issues. Everyone, be quick. Write 3 procedures. You have 5 minutes. Type in the chat box. I will check your procedures. Be quick. So finally, I'm getting incorrect answers. Now I can correct you people. Now I will be reviewing your answers. I have received good number of procedures. Is it right procedure to respond this issue? The risk we identified. Okay. This risk, work in progress. Now, so let us see your procedures. So students, the point is, check arithmetical accuracy of accuracy. Costing sheets. They said they have prepared any costing sheets. Okay. Job costing system. Raw material. So there is no costing sheets like this here. Okay, so this is not linked to this. It means when your mind, sheets are being produced over there. You have also written the same. Obtain and review the costing sheet to check overheads calculations. Standard rate. What is meant by? Which standard rate? For what? I don't know. Discuss with the management the reasonableness of assumption. Which assumption for what? Assumptions regarding what? Last year we were not the auditor. So unclear what you are talking about. You have written the same costing sheet or what arithmetical accuracy. Now, you can also a sample of sheet. You can get answer 0.5 mark for it in exam, arithmetical accuracy. But I discourage it. Carry out raw material. I told you to write about work in progress. Obtain schedule for, yeah, now now this is good. Which supporting documentation? For example, give some example. Which supporting documentation? For example, invoices, payroll costs. Without that, it is incomplete. Right? Check arithmetical accuracy. Again, you are trying to cheat examiner, all of you. I'm sorry to say. You cannot do this. Document, what does it mean? What does it mean? Document how has been calculated. How you are responding this issue. No. The quantity survey they have not mentioned at all. Okay, for what? What you have to do? Incomplete procedure. You can obtain and review computation for work in progress done by management. You could have completed it. Timesheets. Okay, we will talk about it. Inspect a sample of work in progress assets. Okay, work in progress asset. What does it mean? The remaining sentence, I was happy with this. But this, you have not actually developed the point the way it should have been. Obtain the calculation of the finance director. What do you have to check about that? You have to check the assumptions used, arithmetical accuracy. What is it? In exam, if you write like this, examiner will get furious. You will disturb the peace of mind of the examiner. I'm telling you, if you do this in exam. Obtain the list of uncompleted boards. Okay. And to check you want to write something good, but I'm unable to, but there is some proper words are missing. I'm happy you have written something unconventional. Right. Finished goods, I didn't ask. Okay. Didn't ask. Very well done. I appreciate. I appreciate. Okay, so students, now you have written something. Now I will write the procedures and then you will, yeah, then you will see, you will better understand. So, obtain the schedule showing the work in progress of boards at year end and review it for arithmetical accuracy. Now you say, Mr. Hamzah, you see, we were saying that we have written the same. You have to, there is a hell of difference between these two procedures. Their format. Remember, never write the word check. It irritates examiner. Because check doesn't mean anything. Check. Verify, right? Verify. Review. Right? Use the audit lingo properly. The word check is not good. Check, check, check. So when you write, you see the makeup of that. Now, review it for arithmetical accuracy. This can be written and verify costs included in a sample of contracts from invoices, payroll, record, etc. Now it is complete procedure. Because here, the point we are saying, work in progress. Yes. So it's better. The risk we are saying, estimation, amount. Okay. Now, second, yes, discuss with finance director for a sample of contracts, work in progress calculations, the assumptions used in degree of completion, and assess the validity of those assumptions. Now, they said they have overhead allocation. Overhead allocation. Review the details of overheads allocated to the work in progress, whether they are production related or not. Yes. Enough. 3 procedures are enough. You can write one more. Okay. Yes. Physically inspect a sample of boards being under construction. Yes, under processing. physically inspect, estimate the percentage completion, and verify whether the same amount has been calculated by management for those boards at the end. Yes. So 4 procedures. So 7 procedures are already done. The next point is finished goods. Finished goods. For the boat stored for customer, review correspondence of the company and any contract with that customer to verify the asset now belongs to the customer. Yes, now belongs to the customer. Verify. Now, for the other boat, which failed the safety inspection test. For the boat which failed safety inspection, review the inspection report. Review the inspection report and discuss with management the estimate of cost to be incurred to fix the fault. Yes. To fix the fault. Now, verify based on the cost estimate whether the faulty boat, the boat has been recognized at lower of cost and NRV or not? Done. So you have not to write 9 procedure. 3. I have written 10. You have write only 7. Not more than that. Not more than that. Next. The next is finance director's request. Yes. The next requirement is ethical and professional issues and recommend action, 8 marks. So Gavin B has requested that Gary Kent Company perform an additional service to conduct a detailed review of some of the company's internal controls and to recommend improvements. So they are asking auditor to perform this service. 1. Yes. Now, although there is an engagement usually performed by an internal audit team, Gavin has suggested that because the external audit will include work on internal control, this additional work would not incur an additional fee and should be included in audit fee. Good job. The internal control falling under the scope of this review are not directly relating to the financial reporting processes. Okay. Secondly, the company has applied to the bank for additional finance of 60,000 to use joint arrangement in Allen Associate. Yes. They applied for loan and they asked whether Gary Company can provide a guarantee for this finance. Good job. Let us start discussing it. Yes. So, ethical issues. C part. Yes. Okay, students, the point is, they say you will not, it is to provide a service to improve controls and you will not charge additional fee separately, but it will include in the audit fee. Okay, the first thing, right? Now, the point is, so students, let us start. Given the finance director has requested a service from auditor to review controls and recommend improvements as part of audit of financial statements, as they have to do this already as part of audit. Audit. He is right. auditor reviews controls as part of audit of financial statements related to reviews controls related to financial statements. Yes, but here finance director is requesting an additional service. Additional service. Which should be a proper separate engagement and recorded as not recorded, and a separate contract should be done, explaining or setting out or defining scope of work and fee as well. Fee as well. Its fee, the fee of this service cannot be part of audit fee. Yes, it cannot be a separate service. Now ethical threats we are going to reviewing the controls related to financial statements. And recommending improvements is give rise to self-review threat for auditor. Yeah. Self-review threat for auditor, as auditor later on has to review these controls. As part of audit. Yeah, sure. Now, as part of audit, auditor has to review these controls. And if they themselves have defined an improved control already, during audit, they will not be able to, they will be relying their work, the work done by them previously. Yes, will be relying. This is called self-review threat. students, we have to check one thing. Encore is a listed company or not? Just a minute. Because here some safeguard will depend upon that. Now, for ethics question, it is very much important to see it is a listed company or not. Yes. The company is small, right? Company is small. It doesn't seem to be listed. Yes. Because there is no specific information given here. It is listed or not. So, yeah. Okay. Can deal that as well. For a listed company, such as services of review of controls related to financial statements are prohibited by code. Codes of ethics. They are prohibited by codes of ethics. Yes. And core company is yes, is not a listed company. So these services can be provided by Garrick and Company. Yes, by Garrick. By using different teams for different teams for audit of financial statements and for controls review. Moreover, review of controls, design and review of controls is responsibility of management. Yes. And management threat arises for auditor. For auditor, if they provide this service to the Encore company, as they will be performing the duty of management. What they should do? In order to avoid assuming management responsibility, and core company should ensure that manage not in core company auditor should ensure that management of an core company acknowledges the responsibility of design and implementation of control system of company. Yeah, they should do that. Students, it has 8 marks. That's why it is for each valid point. Safeguards 1 mark. Each valid point, it will be 1 mark. Okay? Which you make. Now, so the next they say, they ask to provide guarantee. So, secondly, and core request from Garrick company to provide a guarantee related to bank loan will create a self-interest threat for auditor. As after providing guarantee, the interest of Garrick will be created in the financial affairs of Encore, because I am giving guarantee today and tomorrow, yes, I have to now be careful. So I cannot give. So auditor will not be independent. While auditing its financial statements. Yes. So, as per Code of Ethics, guarantee, if it is provided by firm for a client, self-interest threat created by it is so significant no, it's not advocacy. I will tell. Just a minute, let me complete it. I will explain. It's so significant that it cannot be reduced by any safeguards. Safeguard. So, Jerry and company should politely decline to provide this service to the Encore company. It should decline. Note it down, I'll explain. Now, the question was here that it is not an advocacy threat. Now, advocacy threat is different. Advocacy threat is that we represent them in front of bank. Go and negotiate on their behalf. We are present in a meeting with the bank, with the lender, or we give written sum that we are negotiating loan on their behalf. That is advocacy. It is just like that. I give guarantee they are sound health. You, now it is your choice. You can give loan or not. So here it is not a advocacy. Here is just guarantee about financial affairs of the company. Here we are not negotiating anything with bank on their behalf. Is that clear? Is that clear? Yeah. Now, next. So it is done. This question is complete. Finally. So I want to show you the marking scheme. Let us talk a bit about the marking scheme. Just a minute, please. Of this question which we have solved today. Please do not go down. Yes. Past exam paper. Here will be the June marking scheme. So Hannah has asked for a good question. How much time we should spend per question. Yes, I will talk. You are taking, I am taking this much time. Your question is right. That I have solved a question in around 3 hours, right? 50-mark question. And you might be thinking, oh my God, this much time. I am spending this much time because I am solving it with you people. I'm typing, I'm explaining everything. Okay. So, and I'm writing more than the required answer. Where 5 procedures are required, I'm writing 7, 8, and so on. Okay. Just a minute. I will explain. Don't you worry. Now, here we are. I will show you. It's taking time. Yes. Yes. Ethics question we solved. Review of control should be a separate engagement with a separate fee. 1 mark if you discuss. Okay, we did not talk. It is an internal audit. No issue. Not appropriate for a non-listed company. Okay, we have discussed that. Self-review threat it is. Separate teams. Assuming management responsibility. Matters to be acknowledged by management. Loan guarantee self-interest. Loan guarantee should be declined. 3. So you see here, we have discussed only this one point. I have and of still 8 marks. We have discussed each point already. Maximum marks 8. So now come to the procedures are there. Materiality, justification, raw material, work in progress. So this is how you have to 1 mark for each relevant justification and 1 mark for appropriate procedure. You can see. Risk of material misstatement, up to 3 marks for each risk evaluated. Marks may be awarded for other relevant audit risk not included in the marking guide. Just like that, I included here 1 point like this. That one, IS 37, contingent assets. They have not mentioned here. Joint arrangement up to 4 marks. Up to 3 marks, yes. Historic board, analytical review, new client, opening balances. You see here. Half mark for relevant trend calculation. Yes, maximum 2 marks for this calculations. Calculations, maximum 2 marks for the trend calculation. Now, so come to the, let us talk about professional marks. You see here, I have covered all, you will see. Briefly, briefing note, format and structure, subheading, introduction paragraph, communication marks, style, language, clarity, appropriate tone, presentation of materiality. You see? Yes, answer is relevant and tailored to scenario. Adherence to specific request. Do not discuss inventory. You see, do not discuss inventory. We did not discuss there. Analysis and evaluation. Now, ethical guidance, their application. Ethics to support recommendations. I said code is saying this, so they should do this. Application. Risk evaluation is effectively prioritized. Prioritization. Appropriate consideration of the impact if the issues in control in accounting system has on Yes. So appropriate consider risk related to controls of the payrolls. You see that there is impact now. So appropriate judge, a professional judgment. Now it is quite generic. Okay. Any missing information, incomplete information, challenging accounting treatments. We challenged. We challenged multiple things. We challenged that you cannot record the, for example, that the case of storm damage. Discuss that. Suitable determination and justification of appropriate materiality levels. Judgment. Appropriate use of technical knowledge and judgment to propose suitable audit procedures. Using the information in scenario to magnitude. I used the payroll along with analytical procedures, if you remember. So what I'm telling you, that you have to follow the structured approach to right answer, and you will get the professional marks yourself. You need not to be worried. Now, so the next question was how much time we should spend per question, please. This is a question of a student. So yes, I will guide, don't you worry. I'm going to discuss that. No, that is about prioritization. There are, in the conclusion, we are prioritizing basically, which has, it was the marks are there, prioritizing. I read it here. Here, in the conclusion, we are discussing how we prioritized and why we prioritized. No, not on the whole. Only conclusion has to be written in the briefing notes. Conclusion has to be written in the briefing notes, not at the end of whole question. No, not at all. Okay? Is that clear? Now, you see here, welcome. Just 1 second, please. Just 1 minute, please. Student, the point is that this, when we talk about the time allocation, so basically it is 1.8 minute per mark. 1.8 minute per mark. And when we say that 1.8 minute per mark, so if a question has 10 minutes, 10 marks, so how many minutes? 18 minutes. to write about that part. But remember, I suggest my student that 1.5 you allocate, because we have to spend some time, 5 to 7 minutes, 10 minutes on the analysis as well initially. 10 minutes, 15 minutes. We have to spend that. Okay? So that's why it's consider it 1.5 minutes per mark. So now you can allocate the time available. Okay, how to manage the time? So the first 15 minutes, question number 1, I normally say, question 1, you should complete analysis. Analysis, when you pick the data and segregate in 15 minutes, 15 to 20 maximum. When this question started, read the requirement and start picking, copy pasting the data into the requirements and start finding the points. And in the 15 minutes, ideally, maximum 20 minutes, you should do this. And remaining 1.5 minutes per mark when you start drafting the answer. Yes, then start doing that. Is that clear, Hannah? Okay, now. So you're actually, the time is 3 hours, 15 minutes. So first 15 to 20 minutes, if you spend on it, on the planning, the question, that will be fine. In analysis, maximum 20 minutes, you should practice on it. So that you can complete and when you sit there, be active. And then you see here, there are total 80 marks. Now there are 80 marks. Rather, it should have increased. The time now you can increase allocated time. So if we allocate 3 hours, 180 minutes, 180 plus 15. Let me open the Excel sheet in front of you. Let us do this analysis. So 180 minutes plus 15. So these are 195 minutes total available time. And I see here, so total marks are 80. Okay. Now, just see there, out of it, available time. Yes. Out of it, 20 minutes reading time for question 1. Question 1. And 10 minutes each for question 2 and 3. So how much it is? 20 plus 10 into 2. Reading time. 40 minutes gone. Okay. So the remaining is, so this is reading and planning. Reading and analysis. Remember, we have to read the question only once, priority. So in the first reading, we have to do all the analysis in just like I did yesterday. Okay, and today as well, I was copy pasting whatever I was reading, segregating it. And then if I say question number 1 has some format marks, writing conclusion, introduction paragraph. So format of question number 1, okay, 5 minutes. It should not be more than that, right? So it is 45 minutes total. So how many minutes you have remaining? This minus this. These minutes are for 18 marks remaining. So per minutes per mark for writing 1.87. So minute per mark. Now you can see. So let us proceed further. Yes, let us proceed further. So this is done, encode is done. So Winberry, business risk I want to do. I want to lock this business risk today. Business risk and audit risk done today. Next week will be on the reporting, on ethics. Most likely, these areas will be more focused. Okay, procedures as well. Today, we have done 2 questions, evidence and procedures. So Winberry, September 2022. There is a question on risk of material misstatement as well. Now, just a minute, please. Just a minute. There is a question on critical appraisal of CAM. Let us do this first, because time is short. Time is short. We can't go for that lengthy question. Students, can we have one class during the week, a 2 hours class in the evening? Tell me. In the evening at 19 hours, 19 to 21. What do you say? Can we have 1 2 hour class? Tell me, please. Good. I'll communicate. Yes. There are 2 requirements of this question. Student, this first requirement okay, I'll see, dear. I'll see. Yes. A part is why discuss and justify whether the 2 internal control matters should be included in your communication to those charged with governance and management of violent company in respect of deficiency. Now, this is something unusual. I told you, examiner does that. In the previous question number 1, yesterday, you remember? Again, it is unusual. It is based on your previous knowledge of F8. Critically appraise the CAM extracts. This I have to do. Critical appraise the CAM of Branson Company for the year. Key audit matter. Paragraph. We have to appraise. Critically. Yes. The audit work for Branson Company is complete and the audit report is due to be published next week. From reviewing the audit working papers, you are aware that Branson Company is facing some cash flow problems. A letter of support has been obtained from its parent company, Grantham Company. Now, the audit working paper concludes that there is significant doubt over going concern. Yes, and financial statements of Grantham has been reviewed. Okay. Review to confirm its financial ability to support Branson. The notes to financial statement describe the cash flow problem faced by Branson and the support offered by Grantham. The audit working paper concludes that the disclosure made are complete and appropriate. A draft of key audit matter section is below. Now, Students, the first is a going concern. We draw your attention to the going concern problem facing Benson Company. The company is loss making for the third consecutive year, and the going concern problem are fully described in operating. Student, incorrect use of going concern. Key audit matter. This is incorrect use. Key audit matter paragraph cannot be used for this purpose. I'll talk about it. Okay. I'll talk about it. Now. So, which accompany these financial statements. Now, so cash flows problems basically they have. Branson. Now, contract win. On a more positive note, okay, on a positive note, we are pleased to announce that Branson Company has been successful in tendering for significant new contracts. Okay, significant new contracts to supply Talbot Company pharmaceutical goods. The tendering process was very competitive. Pleased to win the contract from Rose, a key competitor. We believe that this will return. What does it mean? Dear, this is optional. I'm trying to arrange an additional class. Mishrin, as per the schedule, it is not there. I know. What I want is, because I will arrange that as per my convenience. You should understand that. Okay. So I will try my best to accommodate all. But if it is the clash there, it will be difficult for me to accommodate everyone. Okay. So please, if you have any issue, you can continue with the recorded videos. Anyone is having any issue, because I have to check my schedule and then announce. I cannot tell right now which day it is. Now, thank you for your understanding, everyone. So, students, key audit matters. How many marks it bears? It bears 8 marks. So we have to make eight valid points. Let us make then. Yes. So it is question number 3. Critical appraisal of key audit matter. Paragraph. Yes. What I'll be doing for my ease, I'm going to copy all that from here to there. So I need not to switch again and again. Yes. So, students, here we are. We draw your attention to the going concern problem. So, first of all, going concern problems are not highlighted in key audit matter paragraph. First of all, they are not highlighted in key audit matter paragraph. Branson Company is facing an uncertainty related to going concern. concern which has been properly disclosed in financial statements. So, and auditor should include a paragraph, material uncertainty related to going concern in audit report. In audit report, to highlight this adequate disclosure by company of material uncertainty. Yes. Next, they say that the company is loss making for the third consecutive year. And in fact, they told us cash flow problem is there. Loss making is too simplistic, is vague. Yeah. Then they said, going concern problem fully described in operating and financial review. So rather, they should mention that they are given in financial statement, notes to financial statements, disclosures, not in the operating and financial review. Incorrect. And third, we are confident that parent company is fully able to support. This is incorrect. Auditor has not to comment on letter of support from parent company. It is not auditor, it is not the scope of work of auditor. It can cause legal problem for the auditor later on. So 3 points I have identified in it. 3 points. Now, 1, 2 marks are for it. 2 points I have made here. 1 and 2, where it should be. Now, 3 more points. They say the statement that company is loss making is quite generic statement when it is clear that Branson company is facing cash flow problems. Yes. And audit evidence have been obtained in this regard. Yes. So, in material uncertainty related to going concern paragraph, cash flow problems should be highlighted. Highlighted. Now, next. The next point is operating and financial review. they have referred that the reference towards operating and financial review related to disclosure of going concern uncertainty is inappropriate. As such disclosures are specifically given in notes to financial statements. And it should refer towards that. It specifically. Next. The next is, they say grantham is, yes. So auditor is giving opinion on letter of support from parent company, Grantham company. Yes, that they will be, that we are confident we are confident that they will be able to fully support, Branson, is inappropriate, as this is beyond the scope of audit work. Yes. And it should, or it may create legal issues for auditor later on. Yes. Now, next. So you see how many points we have made? 5 marks already covered. So the next is, yes, contract to win. Now, contract to win is quite something, friends. They have mentioned the contract to win. So let us talk about it. Contract to win has been discussed as scam. As per ISAs, is CAM should describe about the matter, why it was considered as CAM, and how it was addressed during audit. Yes. So these both aspects has not been provided regarding the contract win. Contract win. Now, so very competitive, okay. Eliminate the going concern problem. Once again, going concern problem. Right? In a significant, successfully, yeah, in the audit report. So, students, 2 points. Next point. The next point is auditor wording that company has been successful in winning a contract, significant contract. Not winning, tendering. In tendering a contract is quite inappropriate. As it is operational matter. It is operational matter. Yes. To win the contract from Rose. A key competitor. And mentioning the competitor's name. That company has won the contract from them is quite unprofessional. Is quite unprofessional and may create legal consequences for the company, for the auditor. Yes. Now, and the next is going concern problem once again. Lastly, once again, going concern problem elimination has been discussed in contract win as well. Yes. Seems like that, which is inappropriate in one aspect. Yeah. Appropriate and as well as And as well as it also gives indication that company is having serious issues of going concern. Yes. Now, so enough, right? So this information should not be discussed in camp. Now, students, it is done. It is complete. So that's it for today, students. The next class I'll be meeting during the week. Nishri, you can talk to me on my WhatsApp if you have an issue. Frankly, okay? Anyone can talk to me on WhatsApp, okay? After the class, if you have an issue. Yeah, no, last time it was not uploaded. Let me check. Let me check. I will upload. Don't worry. Okay. So thank you for joining me. So in the next classes, my focus will be ethics, quality, and other assignments. Right? So in the next classes, that will be my focus. In these 2 days, we have focused audit risk, and that was major focus, and audit report, that was focus, audit procedures were the focus. Okay, God bless you. See you. Take care. Goodbye. Goodbye.